Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for candlestick patterns, then you're going to have to look somewhere else. But if you'd like to start trading like a professional, then stick around. So today we went back to these various industry groups in the energy sector that we've used before. I ran it with quite a number of filters, 0.8 correlation, 0.8 RW coefficient, at least 1.25 standard deviations away from the mean, 3 previous winners, and an expectation value of 5% up or down in 30 days. When I did that, we ended up with only 7 things to look at, and a couple of them aren't possibilities because we have, one end of them, like the MMLP and SLB, in pairs that are already open. So when we've narrowed that down, we're down to only about 4, but this is the one I'd like to take a look at here. APA versus CVE. It is in the upstream basket. So a nice picture here. Now it still has a nice motion, although the motion includes a downward trend here over the past, say, what is that? A little over, not even quite a year, let's say 6 months or so. And it's gone down below the second standard deviation, but it started to have a little move back up here. So I don't think we would target all the way back to the mean, of course, from this picture, but somewhere in this area looks pretty reasonable. The back test is perfect. It's had 4 times outside the second standard deviation, 3 times returns profitably to the mean, and the 4th one is the one that's currently open. And here everything is exactly what we were looking at. It had a little move back down yesterday. Started this little motion a couple of days ago, the motion back up towards the mean. So that's I think a good sign. Let's take a look and see if I were just eyeballing this, as far as a target price, I would say, the first standard deviation below, so minus 385. So let's remember that when we get over to the hitting probabilities. A very strong mean reversion picture. Let's run the Monte Carlo simulation. So the most recent value is minus 7.39, and it is suggesting that we're going to be below that price 30 days from now, or above that price rather, because it's a long 86% of the time. So that's an adequate number. The expectation value is very strong, so it actually thinks that we're going to do really well in 30 days. Half the time we're going to hit the mean, it says, in 41 bars or less. That the mean is clear up at 0.48, and the mode being 25 bars. Let's go test that other number that we were looking at a moment ago, minus 3.85, I think, and run that one. Wow. So maybe we're not pushing it hard enough, because that's saying we'll get there in 14 bars, and the mode being 6. In any case, these are very good numbers, and we're going to take a look at it one more time in the detail page and then make it the recommendation. A very nice picture. It went outside the second standard deviation a few days ago and has been moving around, but it started a little move back up, which is the direction we like, of course. A perfect track record. We're talking about APA versus CVE with a ratio of 4.19. Correlation is 0.84, RW coefficient 0.72. These are all good numbers. Everything looks nice, and a fairly quick reversion to the mean according to the hitting probabilities. So let's make this the recommendation. APA minus 4.19 of CVE. It is a long, so for every share of APA that you buy, you're going to sell 4.19 shares of CVE. Good luck with your trading.